The standard is applicable to tax planning activities and services beginning after 30th June of this year, so we're not too far away, it's a couple of months. And this standard is designed to lead to real substantive changes in how accountants approach tax planning, ensuring that at the very core of all your decisions that ethics is in the forefront. Next slide, please. Earlier I mentioned why the new tax planning standard, why ethical framework in tax planning. Well, it arose from three global key developments. First of all, as you're very much aware, international policy initiatives by the G20, OECD, the UN, the European Parliament, they have called for greater tax transparency. The existing frameworks are a little bit fragmented, and it thus that, in our board's view, created gaps in the ethical oversight. There was also a strong drive from stakeholder engagement, such as the regulators and the policymakers, that urged our board to establish a global ethical framework. No doubt, we also consulted with International Bar Association, and they also emphasized there is a need for a unified approach for tax advisors. The high-profile leaks such as Panama and Paradise Papers thus expose certain aggressive tax avoidance strategies that, while aggressive tax planning strategies that, while legal, can undermine public trust, and so thus there is a growing scrutiny on financial flows and corruption and tax evasion, resulting in government losing over 500 billion annually due to profit shifting. So there is a great pressure for tax reform and ethical accountability from and by accountants. So this standard responds to these challenges. We are aspirational in helping all professional accountants and non-accountants who carry out tax planning services to ensure that tax planning is ethical, transparent, and responsible. And in sum, the standard drives fundamental shift in mindset, and to that note, to make sure that all professional accountants realize that compliance is no longer just enough. It is about accountability, transparency, and serving the public interest. Next slide, please. The tax planning standards, well, it introduces a structured ethical framework for tax planning for professional accountants in business, which is sitting in Section 280, and professional accountants in public practice, which sits under 380. The standard applies to all entities and clients that accountants serve, and we also the board very much encourage other tax advisors who are non-accountants to apply the principles voluntarily as well. Now, before we go on to talk more and give an overview of the standard, we want to be clear that the standard excludes tax compliance or preparation services as part of the description that's contained in Section 280 and 380. And obviously, if you see in the three boxes in front of you, the green, the gray, and the red, this standard does not deal with tax evasion, which is clearly illegal and it's not part of the framework. We want to make sure that these standards focuses remains on ethical tax planning and to avoid any confusion between legitimate advisory services and unethical practices. Next slide, please. What you see in front of you is the different section, the different paragraphs requirements that's sitting in 280 and 380. I'll give a quick overview and mention ones that are quite important and want to highlight to yourself. And before that, and after that, I'll hand the floor over to Hector. So these standards provide clear ethical obligations in guiding professional accountants making responsible tax planning decisions. The key components are highlighted in red, which is a requirement to establish a credible basis for tax planning arrangements and services. And Hector will go on to discuss that a bit further. And the next part is the stand back consideration to assess reputational and economic risks. This is a groundbreaking requirement that the boards come up with. It forces and enables the accountants to stand back once they've provided advice to think about the impact of the advice they're about to give the client or employee organization, and how that would impact on several areas such as the reputation of the professional accountant. We want to make clear that, as you see in the slide previously, the grey box where we talk about navigating the grey zone, we are very much aware that tax planning often involves situations where the legality of actions may be ambiguous. There is no doubt tax laws and regulation are ever evolving, and it can be complex in multiple jurisdiction situations. So these sections aspires to provide tools to address ethical dilemmas in such scenarios, focusing on the responsibility of the PA in carrying out their due diligence in providing the advice. It does distinguish between legitimate tax planning versus aggressive practices that will sometimes undermine public trust. So we're very conscious that there is a need for balancing innovation in tax strategies with the ethical responsibilities of a professional accountant. So now that is a very high-level overview of our tax planning standards, and I'll hand the floor back to Hector to bring some of these concepts to life. Thank you, Hector.
Thank you, Carla. Can we go to the next slide, please? Perfect. The next one. Excellent. Thank you so much. Let's take a minute to look at the standard as it is. Maybe you haven't reviewed it. Maybe you will not have time. If we have these few minutes, let's have a look at a couple of examples to understand what the board aimed to do. First of all, this is not a list of safe harbors. If you do this, this is always okay. If you do this, it's never okay. It doesn't work like that. This is an ethical framework. This is assistance for you to navigate the gray zone. And the gray zone depends on the jurisdiction where you are, on interpretations that maybe will develop in the future. If you're doing an innovative financial transaction, the tax authorities may come up with a completely different interpretation from the one you have adopted. So there are ethical dilemmas, even if you are trying to play by the book, if you're trying to do the right thing. So what this standard does is to assist tax planners, people involved in tax planning, whether they are accountants, they are lawyers, they are engineers, it doesn't matter, to have a framework that they can follow to assess whether what they are doing is or is not ethical, whether it is acceptable, it's legal, it passes a legal test, it can be defended in court. It's not what this standard is doing, because it's a global standard. What it is doing is helping you navigate when you're having this feeling in your stomach that what you're doing is not right. Well, what tools do I have to make that assessment? And there were no tools available globally for doing this. So this standard aims to do that. And this is one example. Section 380.12 says, whenever you're doing tax planning, you need to have a credible basis in laws and regulations that back what you are claiming is going to be the consequence of your tax planning. The determination of whether there is a credible basis involves the exercise of your professional judgment, and it will vary from jurisdiction to jurisdiction. I'm sure that we all have had an interpretation of a statute, of a regulation, of an accounting principle that has been challenged. The thing is that what was my framework of analysis, so that whatever interpretation I came up with, I feel comfortable that is is compliance with my obligation to the public interest, that I'm doing the ethical thing. It's not a bulletproof framework that it means if you follow the code, it will be accepted in court. No, it's for the integrity and the looking after the public interest that is expected of all public accountants. So if you determine that there is no credible basis for some tax planning, the standard tells you that you have to discuss it. It gives you a guide on how to deal with that. I was a tax practitioner and a tax planner for over a decade, and we didn't have these standards at the time. And I'll be honest with you, I had to face counterparts coming up with tax planning proposals that were completely, in my opinion, illegal. But to convince them of that, the argument was, show me where the law says this cannot be done. Show me where there is a ruling, show me where there is a judicial precedent that says that this is illegal. And the thing is that we didn't have this ethical benchmark. It was not something that you could say, look at the code, look at what the code suggests. Are you comfortable that we're meeting this standard? And the discussion would have been completely different. To be extremely honest with you, I stopped doing tax because of these ethical dilemmas. I used to work in a big law firm where we were doing very sophisticated corporate finance and tax planning projects for large multinationals that most of the time, I would say all the time, they were willing to do tax planning just up to the limit of what it was conservative. But then I moved to a smaller firm, and my clients there, they were very aggressive. They were asking for things that I thought were unethical, I thought were illegal, and my answer was, sorry, we cannot help you. But there were plenty other colleagues that were doing that. And I could not point to a standard to say, look, you're not meeting the standard of what ethical in tax planning done with integrity is. So this section, credible basis, is aiming to that. If we go to the next slide, you will have a look at the stand-back test. The stand-back test says, okay, there is some basis for the tax planning you're doing, but take a step back. What will happen in 4 years if you do this? What will be the reaction of the authorities if they discover that your interpretation means that this company will not be paying taxes forever, or the taxes will be paid in 50 years and not now? When this is one of a big taxpayer, the public finances depend on these taxes, or that if this interpretation was acceptable, then the legislator will have to change the law, or this will lead to an economic problem, or this will have reputational impact on the firm, which is providing audit and accounting services in the public interest. How does this look if I take a step back? I'm not thinking about my challenge to come up with a clever tax planning. I'm not thinking about the bonus or the payment that I'm going to receive if I succeed. Let's take a step back and say, how does this look from the outside? How can I justify this? Besides that I was very clever to put two regulations together and came up with this. Would this be accepted? Would I convince a court that this is acceptable, that this is legitimate? Beyond the text of the law, let's go to the spirit of the law. Will this stand in court? Will this stand in the court of public opinion? How will this work? We have seen many cases of multinationals that play a little bit this game and end up allocating resources in different jurisdictions, but when you look at the bottom line, they're paying less than 5% of tax. This stand-back test invites you to have a look at the consequences of the tax planning you're doing. And the fact that it's a code and it's a standard applicable to all of us that adhere to the code, allows you to have conversations with maybe a superior that is proposing something that is too aggressive, maybe with a counterpart that is proposing something too aggressive. And in determining all this, if we go to the next slide, please, the code comes with proposes an ethical decision-making framework. And this framework is structured so that you can follow this when evaluating tax arrangements. It was carefully developed. It's not aiming to look at the legal standard or to meet a legal standard, because the legislation is different in every jurisdiction. It's designed to help you follow some steps that would make you feel comfortable that what you're doing is ethical and is passing a stand-back test. So your organization will not have to face a critical reaction from government, public opinion, or clients in the future, because your proposal, as clever as it may be, ends up creating a big problem, a big scandal, a big enforcement action against you, against your client. So this is for helping us assess how to get to an ethical decision. And first, if we look at quickly the steps, first you have to adhere to the fundamental principles of the code. As you know, they are integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. These are the foundations for the work of a public accountant, and should be the foundations for ethical tax planning as well. Second, you need to exhibit a mindset and professional skepticism. We are not rubber stampers. We are not people that says, okay, if you want to do this, you can do this. We need to be skeptical. We need to think about the public interest, and we need to make decisions that do not compromise our integrity or objectivity. Third, we need to understand. We need to completely understand what we are proposing. We need to look at the legal, economic, and transactional context of the tax planning. This means fully understanding the applicable tax laws and regulations, the legislative intent behind those laws and regulations, and the economic purpose and substance of the transaction. This looks like a merger. Is it really a merger? Maybe it's not. Let's understand it. Let's go, why are we doing this way? Is it just to get a treaty benefit? Let's understand this and then assess whether this is ethical or not. A tax planning arrangement that technically complies with tax laws but contradicts the legislative intent could still be problematic. And it may be okay for 1-2 years, but in the third or fourth year, you will get a big enforcement action. You will end up paying more than the taxes you would have paid if you had undergo a less aggressive tax planning. Ensuring compliance with both the letter and the spirit of the law is key to the ethical decision making. Then exercise. You need to exercise professional judgment and establish this credible basis. We just went over it. Then you need to consult. You need to seek external or internal expert advice if necessary. If this is a complex derivative operation, you need to have an expert from your firm that understands derivatives as much as to the extent of the expertise available, to make sure that you are conducting this tax planning with all the regulatory expertise at hand. This may require to involve legal professional, other tax experts, or in some cases, if permitted, to consult with the tax authorities. Sometimes you will have to do this anyway because you're coming up with an innovative financial transaction, a new way of doing business, and this consultation phase of the ethical framework is key to that. Then you need to communicate. You need to engage with your clients and those charged with governance at the client. I work with a lot of boards, and I'm a board member, and I'm always interested to have management presenting the tax planning proposals that we are conducting. And I want to make sure I do ask for credible basis. I do have always a stand-back test approach. So you engage with those charged with governance. I had the experience as a tax planner that the client was asking for a very aggressive tax planning. And I said, let's have a meeting with your board and present this. And the CFO said no. I said, why? Because they will not like this. I said, how can we go ahead with this proposal if your board is not willing to endorse it? I said, well, they don't have to know. Yes, they do have to know. Because in the end, when this blows up, they will say, who did this? The CFO, who else? The tax planning advisors. And that will be you and me. And I'm not willing to take that responsibility. If you want to go ahead with this, we go to see your board, and they need to listen from you and me that this may not have a credible basis, that this will have a terrible stand-back test in a couple of years, and they need to decide whether this goes ahead or not. So reputational, regulatory, or ethical concerns need to be escalated when this will help the organization and the tax planner to come up with the right answer. Then you need to evaluate, consider transparency and confidentiality. I always tell my clients, you cannot rely on secrecy. Secrecy is disappearing very slowly because of more accountability and transparency laws, but it's also disappearing because of leaks. You cannot assume that something that you're discussing will remain secret or will remain private or confidential. We need to be doing things in a way that can stand review and scrutiny in the future. If you think of all the clawbacks and new ways to remunerate managers, many of them have to do with the fact that they were adopting strategies that were very profitable for a couple of years and bring lots of troubles in the future. Well, all these clawback or ways to collect back those bonuses and remuneration are dealing with this. We need to assume that there will be a review of what we did in the future. Then develop, and this is basically maintaining documentation. You will be asked to justify what you did in 5 years, in 10 years. You need to keep key documents, judgment, decisions, and actions documented in a record of decision making that can attest that you follow the code. And finally, you need to respond. You need to address potential non-compliance with laws and regulations. I mean, if what you're seeing is illegal or is breaking the law or the regulation, you must take action as appropriate in your jurisdiction. This may involve raising concern with management, advising the client of potential consequences, and asking to see the board, for example, and in some cases, withdrawing completely from the engagement, saying, I don't want to take part in this. To be honest with you, I did that. I had cases where the counterpart was proposing to sell an asset by throwing it into a couple of companies in a tax haven and selling one of those companies, so there will be zero tax. And the moving of the asset was at 10, and the selling of the asset afterwards in the tax haven was at $1 billion. So there was no way that you were possibly going to justify that. And the advice to our client was, don't buy this asset this way, because it will be a problem for you in the future. So sometimes you need to withdraw from the engagement. Sometimes you need to advise your client to withdraw from the deal. And next slide, please. And this is the last one, I promise. I will not take much longer. These ethical dilemmas in tax planning are part of a broader conversation, which is the ethical culture of a firm, the governance of a firm. whether it's your own firm as a tax advisor or your client's firm. And in both cases, what we need is to generate a mindset of thinking that the world is not going to end with the current tax year. This company is expected by shareholders, by stakeholders, by clients, by suppliers, by its workers to be here in 5, 10, 50, 100 years. And for that, the decisions that we make need to be ethical, need to be sustainable, need to be taken with a longer view. It's really easy to focus on the task at hand and to say, okay, I'm going to solve this problem and I'm going to be very clever, I'm going to do this, and I think it will pass. Maybe there will be no enforcement, nobody's going to notice, but sooner or later, this is going to come back to the organization and hurt it. So cultivating an ethical firm culture is part of a broader picture where tax governance is one of the elements. So when you think about this, please keep in mind as advisors to organizations that you want to foster an environment that encourages ethical behavior by implementing clear policies on ethical and tax practices, by encouraging open dialogue on tax decisions. This is not something that it's decided on closed doors. There should be scrutiny within the team, the finance team, the M&A team, whether this strategy is okay, creating mechanisms for transparency and accountancy and accountability. And we need to think of this in a strategic way. Ethical tax planning will reduce reputational risks, will reinforce the credibility of the organization, of the tax planners, advisors that help them, which is in the public interest, and will enhance trust with regulators, with investors, and with society. You have seen the backlash by consumers, by society, when some of these large multinationals that we love because of the products that the clever and super useful products that they produce, when society understands that they're doing that by cheating on their tax obligations, there is a significant reputational and backlash. So we need to think strategically, what is the role of tax planning for the organization? And there is a case for ethical leadership in setting the example. Leadership must set the tone at the top. And that means that we cannot ask the workforce, the collaborators, to have an ethical mindset if we are playing with tax regulations, but we are having aggressive tax planning, if we are avoiding taxes. This has a trickle-down effect through the organization. And if I'm an employee there and I have myself an ethical dilemma, I would say, well, if the board, if the CFO don't care about ethics, why should I care? And there are consequences of this for the organization that we want to, this standard aims to promote a broader ethical compliance and mindset in a firm. To consider this not just as a compliance tool. These standards are a framework for building ethical, transparent tax governance with an ambition to become a global standard. And we invite you all, professional accountants, firms, lawyers, regulators, to adopt and integrate these standards into your daily practice, to educate and train your teams on these ethical tax planning standards, and to lead a transformation towards responsible tax behavior.
Thank you, Mr. Hector. That was so insightful. I know you have lots of questions, but because of time, you will need to stay with us, please. I'll introduce the next speaker, Dr. Timothy, who will be taking us on our next paper discussant. Implication of the tax planning ethics standard on tax practice and administration. So
this is one of the most important things that have happened to the tax area globally, and we look forward to having a more ethical behavior in Nigeria and beyond. Let me start with what he has discussed. He has given us broad understanding about what the code or the standard it tends to achieve, and this is very, very important because, as you know, ethics is actually the soul of business. Ethics is the soul of governance. And so he actually talked about the court of he talked about our conscience, right? And also the fact that we have the court of law, the court of human conscience, and the court of law, right? And that is very, very key because most of the times we have this eternal questioning process, going through our mind anytime we want to take action. And that is very important. So let me try to discuss a few things. We have seen that what is very critical here is the need for us to have a credible basis for decision making. How are we going to be guided as tax professionals? How do we ensure that what we are doing will not lead to any form of risk? How do we manage the threat? Because as a professional accountant, as a professional auditor, as a tax accountant, we are faced with this dilemma. And the dilemma is actually more serious because as a professional, you are standing between two sides. One is the client that you need to, help. The client that you need to provide professional services. The client that you need to guide. And the other side is public interest. The other side is public interest. So as a professional accountant, you are standing between, your client and public interest and government because them, right? And I've come to understand that one of the major principles that will help for us to be able to benefit from this standard is professional competence, right? But I've come to understand that, yes, this program is very key, but what's very important for us to do is to ensure that professional accountants are abreast of the content of this code. The key thing is that how many professional accountants are familiar with this particular code, because they may not be able to benefit from this standard until they are familiar with the provisions of the standard. So part of the thing that we need to do as professionals, as professional accounting bodies and what have you, is to ensure that this principle is strengthened in Nigeria. And I was talking about, court of law earlier. And we know very well that there is a place of deterrence if we must have a sound professional ecosystem in the country. And so let me give you an example. While I was preparing, I now stumbled on what happened in the US in 2013, where Ernst & Young was fined $123 million for assisting clients in aggressive tax planning. And the question that came to my mind was, when are we going to get close to this in Nigeria? And as Mr. Usman Adamo was saying earlier, he was talking about, professional bodies and how probably they are not helping. And we can also take it further to regulatory bodies. We have the Financial Reporting Council and all of them. We have the ICANN, we have the ANAN, and of course we have the CITN in Nigeria. And while I was also preparing, I was thinking that if I am not a member of ICANN, I am not a member of ANAN, And the standard is saying even if I'm not a professional accountant, I can be guided by the code, right? Now, if a tax practitioner who is a member of CITN, does something unethical, now, are we sure that CITN is going to be guided by this standard, and they are probably going to cooperate with Financial Reporting Council and other regulatory bodies to bring the people to justice? Because if not until we are able to deter, if not until we are able to bring to books those that are not ethically guided, the whole essence of the standard will not be achieved. So it's something that is very critical. And when you look at the code, you will also discover that there is the aspect of our legal system, the aspect of the laws and the regulation in Nigeria that is very key. And so when you look at the standard, it tells us about uncertainty, the challenges that we face as professional accountants. And one of the challenges that we face is the fact that we have gaps in the tax laws and regulation. And all of us are familiar with our legal system, where even when gaps are discovered, it takes us years to be able to amend the law. And so if we are not able to respond to the gap very fast, how do we fill the gap? Because if something is clearly stated in the law, if there is no gray area, we may not have much challenges. So if there are issues that the law is supposed to handle, if there are gaps that the law is supposed to help to fill, and the law is not responding very fast, we will have issues, implementing this code. And so what is also very key is how responsive and how committed is our court system, our judicial system in Nigeria. Because by the end of the day, the tax authorities will have to go to court and prove their case and ensure that, yes, this company has indulged in harmful tax planning. And so this professional has, indulged in serious tax practices, tax planning practices. So all of us are familiar with the system that we have in developing countries, including Nigeria. And we know that some of these things, is possible that the judge wants to do the right thing. But are we sure that the judges are well equipped? Are they well equipped about some of these standards, about the laws, about the tax law? Because, FRS and State Board of Internal Revenue Services have lost a lot of cases, not because there are no issues, but because, the judges are not familiar with the laws in the country. So these are some of the issues that, we have identified. And, do we have hope in the system? Yes, there is hope in the system. But before I talk about, whether there is hope in this system, whether we have hope in this code in Nigeria, whether this code is going to help us in this country, it is also important for us to consider what he talked about the last slide. He talked about culture. He talked about corporate culture and governance. And I want to extend it. Apart from corporate culture, I want to extend it to the culture in the country. Professionals are part of the system. And so when we have a system where, the cultural system, the cultural disposition of the people, when we have a country where we don't tend to give attention to, what we need to give attention to, and the professionals that we have in practice, the professionals that we have in our country are also from that kind of system, what are we going to expect? So why it is very critical for us to pay attention to corporate culture is also important. We pay attention to the culture that we have in the system in the country as a whole. Because it has a lot, when you look at literature, it has a lot to do. And culture determines what people see as normal and what is abnormal. So we need to actually look at that. And I believe that improved ethical culture in the country will also help practitioners to do the right thing. And so I believe that when this code, comes to life, and we begin, and our practitioners begin to do the right thing, government will be able to earn more money from revenue. And yes, do we have hope? There is hope. Why? Because recently we have started seeing that Financial Reporting Council is improving. And so when they improve, we will be able to get this standard running. But as the financial reporting standard is improving, we also expect that ICANN and NANAN and other professional accounting bodies will also step up for us to ensure that some of these, we have to create the awareness, we have to educate professional members, we have to keep, reminding them of what they are expected to do. And I believe that, with this, the image of Nigeria tax practitioners and compliance with the necessary laws and what have you will improve. So professional bodies have a big role to play. Professional bodies have a big role to play. In number one, creating awareness. People need to understand more about this code. People need to know. People need to know that this code is there and that this code is something that will provide guidance, so that as professional accountant, we'll be able to guide our client, properly. And there is need for, our government. There is need for government to also respond quickly. Government needs to respond quickly to filling the gaps that we have in our tax laws. Since it is the law that determines what is tax evasion, what is tax planning, and what is aggressive tax planning, responding properly to the gaps that we have in the law will help us to, reduce some of the challenges that we are going to have when we begin to implement this code in Nigeria and beyond. So Financial Reporting Council must stand up to its responsibility and begin to sanction every professional accountant, professional firms, and corporates who probably will not want to, follow this guidance, will not want to follow this code in helping to address tax planning related issues in the country. Thank you so much.
The first question I have, Mr. Hector, are you still there? I think it's for you. Okay, so the question is, what are the implications of tax planning for small firms who are at the risk of losing clients if they follow the process all through, knowing that in their jurisdiction, some areas it's legal? Did you hear me, or do you understand what I said?
I did hear you. I'm trying to understand the question. The question is, the challenges for smaller firms.
Yes, with small firms, yes. They don't have a lot of clients. They're aggressive in terms of getting clients. They just want to have, the balance to break even. And knowing that in their jurisdiction, some of those gray areas are legal, even though they are not 100% ethical. How do they balance using tax planning? For them, what are the implications for them?
This is, I would say, pretty much what I had to face at some point in terms that there are practices in your market that are unethical and they haven't been challenged. I wouldn't say they're legal. Probably, if they're unethical, they're probably illegal, but haven't been challenged. Or the courts have taken a very literal interpretation, or the regulators or the legislators have failed to fix the loophole. But this is just a matter of time. In my opinion, having a code like this that should bind all public accountants and tax planners with the same threshold, the same bar that we all have to follow, will actually make it easier for smaller firms to be in a level playing field with other firms. But I struggle. I have a small firm. I struggle, and I don't take clients that do things that I feel uncomfortable with, because it may be a short win, but in the long run, it will destroy my reputation. And I like that saying, that reputation is something that you build like a small ant for years and years and years and years, but it goes away like this. And in a profession like public accountants, where we have the public interest as our something that public interest is a key element of being a public accountant. Reputation is key. So maybe it's not the best advice, but I would advise smaller firms to try to stay in the ethical zone and not agree to go into the illegal or super gray dark area just to get clients. It's a short win but a long run problem in the end.
Thank you so much, Hector. Thank you for that. I mean, it's just it's being tunnel vision, just being short-sighted if you decide that clients are more important to you than your reputation. So thank you so much. The next question will be for Dr. Timothy. In that same line, what do you see? What are the implications for tax planning ethics in Nigeria, knowing our environment?
Okay, so we are in a dicey environment, and I'm tempted to think that we perhaps have more challenging environment than other places. And so what do we do as a professional, whether small or big? Social contracts exist, right? There is an unwritten contract between you and public interest and government, why you need to do the right thing, because it is actually very painful to be on the wrong side of the law. So reputation is very key, and I strongly believe that yes, on the slide there is an issue of sustainability. So the only sustainable way a professional firm can exist well is to do the right thing. You may lose all the clients you have now, but thereafter the clients you are going to have are those that will keep you, keep you safe in practice. So to be sustainable in practice is to be on the side of the law, is to be professionally guided, and whether small or big, the only thing we need to do is to be ethically guided and not try to satisfy the desire of your client. Thank you.
Thank you so much, Dr. Timothy. So if you want to stay sustainable, you have to be ethical.